Hey, good morning, everybody. Welcome. Tuesday, April 15th, about a half hour before the market opens. Want to put out a new video. Quick little reminder up front, though. Unusual Whales, they have a few sales throughout the year. They're having an Easter sale. So the way that works is they're doing 15% off monthly plans. And then if you're already have Unusual Whales subscription, you can actually get 20% off if you upgrade to the annual plan. Use my custom link there. It will help you out get a discount. The sale ends next Tuesday, and that's how we can get you that real-time option flow and alerts. Scan the QR code in the pinned tweet there or click the link. But enough about that. Let's jump into GameStop. How about that yesterday? We looked at the net flow yesterday in the afternoon. I don't know if you saw my post. It was kind of a late afternoon update. I talked about the net premium kind of fell off there. Was still down about 3.5 mil in that regard because I had noted yesterday around 12:45, seeing some of those positions getting wound down. Saw some bid side selling maybe winding down of the 30 calls for July 18th, the 30 calls for May 17th. Saw some bid side, some suggestive selling. Saw some puts being bought for this week at 25 level and some $25 puts at next week, or pardon me, May 2nd being sold. So it's just something I wanted to take a look at because we kind of saw that net premium decline. I know a lot of people are like, they didn't feel, as strong about the stock in the moment. And I only posted that just to say, hey, it's down a little bit, but it wasn't anything too bad in that regard. And we'll get to that net flow in a minute. But, I thought, the price was still kind of trading around Friday's close around the 26.40 yesterday. And then it kind of pushed up into power hour towards the end of the day. So what did we close around 26.95, 26.98? So a nice strong move. If you look over there in your top left corner, I've got all your moving averages there. You got your 9 days, your 9 EMA, your 21-day EMA, your 50-day SMA, and your 200-day. So I like to keep those on the daily. So clearly a nice big strong move above. RSI is starting to push up about 59 now. Granted, that's a lagging indicator, comes after the fact. So a nice strong move, another higher high with GameStop on Monday. So very interesting to see. Volume Monday about 10.6 million shares, 11 million on Friday. So kind of in line there with the volume, but a nice kind of extension with the move, even with some of that premium leaving the table. So kind of exciting to see there in that regard, because it's still well above. Like the 50-day simple moving average is 24.58. The 200-day simple moving average 24.84. And then like your 9-day, which is like your closest one's 24.94. And then the 21-day EMA 24.36, so well above all of the current moving averages. So, kind of bullish in that regard, but also, use those levels, in case there's any type of pullback, something to monitor, because just last Thursday, the low on the stock was 24.42. Yesterday's low is 25.68, which I did see if we look on the chart. I think when that low came in, I'm pretty sure it looked like GameStop bulls jumped in there on that. Yeah, there was, if you look at the volume there during that low yesterday, the volume kind of picked up there, and then boom, nice move to retest. And then if you use EMAs, you can see this is on a 5-minute, a nice strong, bullish move with continued volume to cement the move. So kind of cool to see in that regard. The bulls definitely showed up with GameStop to defend that lower level in that regard on Monday. So let's jump over to the flow real quick, though, because even though we saw the net flow leaving, let's get you what you need to know. So we look at GameStop, like I said yesterday, we saw some of that premium start leaving the table. Price declined a little bit to 26 and some change, starting slipping below 26, and then you saw some of that. But then it stayed flat when I posted. And then we picked up a little bit from 3.14. So about 1 million picked up in net call premium there in that little whoop into the end of the day there. Net put premium did remain slightly elevated, but not alarming. And I'll show you where it was mainly triggered. So with Unusual Whales, there's a lot of different things we can look at, and you've seen that throughout the videos of the posts. But I've sorted yesterday's flow in regard to net impact, meaning like what was the impact on the chain in regard to the net call premium or the net put premium. So we'll look at that here because yesterday's total daily premium was about 37 million total. So we had 235,000 call volume, 51,000 put volume. And then if we look like a largest net impact was the $30 calls for July 18th. You see that 1.3 4 mil, 23s for May 16th, 10 for June 20th, 25s for June 20th. So some of that coming off the table. So if we look at those 30s yesterday, we can see of that volume, 5,500, which is what I was talking about $2 million worth, was leaving the table because the open interest decreased this morning by 2,000 contracts. So clearly, somebody departed this particular position and took some gains in that regard. So they could have been buying them here, and boom. So they also could have been selling some of these as well, and then sold to other people. So they changed hands. But nonetheless, some money did come off the table because we saw that impact, that premium decline. And with the 2 million total premium on there, you can see the net impact. That's what brought some of that down on this net call premium. So, what were some of the other larger impacts that I saw yesterday in that regard? The $25 puts as well for May 2nd. The $28 puts, because that's right under, the 29.75, I believe, or 29.58 is the conversion price on the notes, the arbitrage price. So as stock moves closer to that, the arbitrage desks are going to hedge against it. As the stock declines, to like 25, they were probably buying yesterday just to cover those short-term shorts for the arbitrage situation, just until either the notes, get to conversion price or stay below it. That's just a part of that as well, the arbitrage that's taking place. And I've shared that before on my page about the convertible notes. So if we drill into where that actual volume was yesterday, we'll let you take a look at it. The highest volume was on, which is always week in, week out, usually is for short dated calls. And reminder, the market's closed Friday, so all contracts are expiring on Thursday. Futures is open Friday, though. But the $30 calls, $28 calls, 27s, those were all your highest volume, with the 30s for May 16th as well. If you see here, kind of equal green, red, kind of split like we've talked about before, equal amount of buyers, equal amount of sellers, as they were all like transacting at the bid and the ask. So of that volume, 25,000 volume yesterday and about 450,000 premium, we can see bid volume 11,000. We also see ask volume 12,000. So like I said, it's split between the bid and the ask. So you got buyers and sellers, day traders, scalpers, covering positions. It happens all day with any stock, let alone with GameStop. Any stock that can be traded, there's multiple sides of the stock to trade, as well as on the options, besides just common shares. So like I said, there was an increase in open interest. More likely was probably buyers that bought maybe in today that it carried over into open interest. Could be some that thought, I don't think GameStop will close above 30 on Thursday, so they decided to sell some of these covered calls, collect $25 a contract, and as long as GameStop didn't close above 30, they'd keep that option premium. Or if it closed above 30, maybe they didn't have a problem having their shares called away at $30 each. So yeah, there's just like I always talk about, a lot of different scenarios in that regard. The $27 calls, yes, there was volume yesterday. Yes, nearly 900,000 premium, but only about 10% of that appeared new open interest. Again, you have kind of split between buyers and sellers. A little bit more bid volume than ask, but it's buying and selling, day trading, scalping, etc. More than likely is going to be the same thing with the $28 calls. 15,000 volume, less than 10% appearing new open interest. Yeah, there was some decent premium with 600,000 yesterday, but if you note up here, again, that ask very similar to the bid. So it's buying and selling, selling and buying, covering and closing. Closing and covering, whatever you want to call it. So 26, which were those did close in the money. Now on this particular, there was a little bit more volume yesterday than open interest, and we actually alerted that on usual whales, and these contracts were filling at $77. So if you had flow alerts set up with your unusual whales, you would have got alerted that the $26 calls for April 17th, we're seeing more activity than the open interest, which is always something to take a look at, because sometimes that can be directional. Sometimes it may be nothing. In this case, it was directional and indicated a move. So if you had jumped on that particular alert at 77, those were getting filled at $132 into the end of the close. So nearly double from the alert on unusual whales. So, but again, of that 8,300 volume, only about 1,000 appeared new open interest. So open interest did grow a little bit in that regard. Let's see, was it 6,300 grown to 73? So, grew about 15%. So, maybe some selling here, buying back when they got cheaper. Some buying here and maybe selling once they rallied. So, like I said, they change hands, but nonetheless, that was part of a flow alert right here. Came through at about 12:55 Central Time, so 1:55 New York, shortly before Power Hour. So a nice way to double your money on some short-term volatility. I love short-term volatility. It can be dangerous, but with managing your risk and done correctly, cut your losers quickly, but your winners can compound into bigger winners. So let's look at these 30s for next April 25th, next week as well. 7,000 volume, about 400,000 premium. I like to look at things 500,000 premium or higher. Just because honestly, the other stuff's just too small sometimes to make an impact. It doesn't mean that it's meaningless. It just means its impact is smaller in that regard. See about 7,000 volume on those. 2,500 pure new open interest, so a little bit growing. But again, sure, a little bit more ask side, suggesting buying than selling. But again, a mix of buyers and sellers. Now, however, those contracts were when GameStop dipped, under 26, they were filling around $45 and moved up to 60. So about a 33% run just on that volatility. So if we look yesterday, volatility now at 88% yesterday. Then that premium was down. So a lot of people are like, but hey, I mean, the price stayed up. In fact, made a higher close. So sometimes it isn't the options, it's just how it was. And the level at the 25, like we showed on the chart, it was definitely defended. So if we look at where the bulk of the money for all of that option premium, because that's how I like to look at it, it makes it easier. We usually sort it by the highest premium. It kind of gives us an easier picture to look at once we've already broke down what we just discussed now. And like we talked about, was highest premium was on those 30 calls for July. We talked about some money coming off the table. 35s for January and 30s for June. So we'll take a look at those. They were all $1 million in total premium. You're welcome to pause or take a screenshot here. This is your premium columns. This is sorted by highest premium. Then over here is going to be your actual your strike, your expiry, whether it was a call or a put, how many days to expiry, what was the stock price at. Here's your average price of the contract, what it last traded at, and then also to note your current volume that day and the open interest. So we talked about those 30s, but let's look at that 35 for January and see what they were doing. 1.2 million premium, so volume transacted, but open interest decrease. So it's more than likely somebody bought, sold, wound them down. Yeah, it's hard to say, but the OI decreased just a little bit. So it may not be anything, may not be something. It wasn't like, hey, someone's loading 35s for January. Could have been. Most certainly could have been a few people. Like right here, someone buying a few of them. $10,000 worth. They bought, 19 of them. Could be big selling here. Someone didn't think GameStop would be above 35 in January, so they're selling. It's hard to say. A lot of time on that contract, so that's why it's fetching a larger premium in that regard. And then the $30 calls for June, a similar story. $1 million premium. Now, the volume yesterday, 3,200. You did see open interest increase about 400, about 10%. A little bit more selling than buying. So some of these could have been wound down. Changed hands, trader, as because we're getting closer to expiry, so trader might have repositioned, might have had change of heart when the stock went down, might have rebought. It's hard to say without seeing exactly everybody's individual. We can see the individual trade. For example, they can look at every trade on Unusual Whales in real time. Whether it's one contract, whether it's 100 contracts, where it was filled, who filled it. It's very transparent. But of that one, I don't know what that trader's intentions are. So we do our best with the data, and we formulate hypothesis or hypotheses to determine that. And then we try to make our best guess, best judgment based on that data. And then, combined with risk management, proper capital allocation, an understanding of capital markets, market mechanics, understanding the risks involved. We try to take trades. We cut the losers quickly. What's the point of holding on to a loser quickly? Scale out of your winners and let the winners compound. If you cut the losers quickly, for example, if you bought a contract for $100 and it easily drew down to 80, you could do a couple things there. You could think, it might go back. It could go down too. But at 80, you've already lost 20%. Just cut it. Don't tell yourself, save your capital. Because what if it went to 20? Now you only have 20 instead of what you could have just had 80. That's where it comes down to emotion and risk management. Would you rather lose 20 or rather lose 60? Personally, I'd rather lose 10. So I buy something for 100, I see a 10%, 15% drawdown, I'm leaving. I don't care. Why? Does it invalidate my trade idea? Not necessarily. Still might have been a good idea. Maybe there was a better entry. Maybe the thesis or the plan didn't work. Maybe you thought, well, I don't think I'm wrong here. You re-entered. Boom. Then you saw 15, 20% gain. Okay, now you're flush. Now it's moving a little bit up more. Now you're scaling out. Okay, now I'm seeing my thesis play out, and then boom, now you've let that winner compound. But if you continually ride like, short dated calls thinking they'll come back, you're burning theta every day. The contract's losing value regardless of the share price. And as you get closer to expiry, you need that much more of a larger move. So stop blowing money in that regard. I mean, if you let a contract draw down, you assume the risk when you bought it anyway. But if you let it go to zero, if that was your plan, great. Sure. Hopefully you were risking less than 1% of your portfolio if that's your thought process. But just make it long term. You got to think long term. I'm 45 years old, so there's a lot of the YOLO zero DTE days. Sure, they're fun, but they're not for me the older you get. I still have an incredible risk appetite, but I also want to think long term as well. It didn't work this hard to blow it all up. You know what I mean? So we looked at that gamma, got a little bit tested in that regard. When we come down, we talk about the 25, the $26 level, the 27, 28, the gamma's there. So, everybody's like, oh, when it goes down, well, the shorts are going to, short-term shorts are going to cover the stock on any drawdown for sure or adjust the positions. Some traders are going to load the dips. So it just all depends. But if we look over at that gamma here, before we get the opening bell, we talked about the spot gamma before, we're sitting right on that 27. See, it was 25 was the highest. Now I said if we get to 25, it could get kind of juicy over 26, 27. Now you're seeing 26. Now you're seeing 27. Now gamma building at 28, 29, really up there at 30. Go ahead and get your screenshot here for spot gamma. I'm not going to go through it because I go through it every day. That way you can take a screenshot for what gamma is. In short, the more shares here for the green is long gamma, meaning upside. The more short or shares here red is downside, put gamma. So at $21 million, about every 1% change in price, market makers, etc., hedging about $21 million worth of stock to control the stock in that regard. So as GameStop moves closer, these calls become in the money. Gamma increases in that regard because of exposure, and it becomes a little more spicy. You saw it last year. We talked about the gamma at 25. You blow that off, you'll see 30 and 35, and that's exactly what happened. We called it in May. We saw it. It wasn't like, hey, we called it, we're right. We're just trying to demonstrate that with gamma, using unusual whales, you can see these things kind of happen before they happen. And if you get the follow through, then you understand the why. So if you look at the gamma exposure, net gamma exposure, highest by strike, was at 25. It's just built all the way up. It's ramped up to 30. So by expiry, yes, it's short dated for this week, but it's still been building for next week and then into the May and the June expiry. And as we get closer to May and June, you'll see probably, if GameStop continues with this trajectory, you'll see these net gamma increase. But, put gamma sure is there this week, but net gamma is in charge. So, unless you get some drastic news or changes or offering or some wildness with the stock, the delta also, net delta is strong at 25. To the call side, 25, 20, 30. It's strong. Not to the put side, but to the call side. Again, that gamma exposure via delta, though, has already ramped up into May, June, and into January with positive net delta. So gamma is building. It is building long term. I'm not saying it's the same setup as last year, but you saw this setup last year. So if you followed my post last year, you followed the flow with unusual whales and GameStop, we talked all about it. It's a very similar vibe. So everything we look through every day is just continued follow through. We continue to assess the option chain in real time, and we continue to report on it. It's up to you to manage your risk, manage the data. I just try to give it to you in a transparent format. I did not see any new news this morning on GameStop or any new SEC filings, which I always check for. We'll probably have the proxy for this year coming up later this month, maybe for the annual shareholder meeting. No recent insider buys other than the last few ones. And as of recording shortly before, about 2 minutes before the bell rings here, just want to get a look at GameStop. Last trade was 26.84, about 115,000 shares this morning. Pre-market high 26.95, pre-market low 26.71, even above Friday's close. So cool to see. We'll look at the real time here, 26.88. So we'll take a look. Have fun with it. Enjoy your day. It is Tuesday. If you watch the video all the way through, I always do appreciate it. Like I said, if you were looking at unusual wells and you want a discount, hit the link or scan that QR code and get you set up. It ends next Tuesday. If you watch it all the way through, just comment down below unusual whales. I know you watched today's video all the way through. Good luck. Happy trading out there today. And I'll see you lurking on the internet. Enjoy your Tuesday.